Well, thank you very much. Good speaking with you, as always, here on CNBC TV18. Always a pleasure. Actually, we have one of the top bankers in the country joining us now, who also, I think, facilitated the Sirma IPO that we were just discussing. Dharmesh Mehta is Managing Director and CEO of DAM Capital. Dharmesh, great to have you with us here. Thank you very much. Congratulations. I mean, 30–40% pops on listing day. It gets you in the up and up kind of mood the market was in many months ago. But what did you sort of make of the company and the prospects? It's, looking pretty good.
Hi, Prashant. Hi, Nigel. Yes, it's a good day for the Indian capital markets, especially for the IPO markets. And after almost 2.5–3 months, the company is getting listed with a very decent listing kind of a pricing where every investor has made money. And as Nigel rightly mentioned, it was priced very attractively, and the sector has got very strong tailwinds. That was one of the key reasons why you've seen this kind of listing gains. And hopefully, with the kind of growth story which is in there, as mentioned by the management on the roadshows, if they are able to deliver on what they promised, there's a good upside on this stock.
Hi Dharmesh, good to speak to you after a long while. Good issue. Congratulations, you guys helped out as well. What's in the pipeline though? What should investors look forward to? The IPO pipeline, this one saw a massive subscription. And investors have been rewarded, as you said. But what's in the pipeline? Are there a couple of banking names that are likely to come out? I'm just asking you that because the street is speculating what's happening with these banking names. Could be some consolidation, could be valuations, or could be some new kid on the block coming about. So you say, why don't you go to the ones that are already listed?
Nigel, almost 125 companies have filed for IPO. So of course, every sector is covered in that. I wouldn't just short point to a banking name or something else. I believe a lot of companies require capital for the growth story, kind of the phase India is right now. So out of 125 names, I'm very sure many of them will go through, maybe almost 20–30% of them. But the other ones won't be that easy as the market is still in a volatile mood. So we just don't know what happens in the very next week or a month from now when they need to launch, especially because of the global environment. But yes, there are very, very interesting names. There are tech companies, there are financial companies, there are consumer companies, and there is also a few more EMS companies coming to public. So there is a variety of deals coming through, and one has to see how many of them go through. And the companies which have a decent valuation is priced very attractively like this one, I'm very sure there is enough demand for that. Because there is enough liquidity in the system today. I don't believe there is a problem of capital, it's the problem of confidence. So wherever people see the valuation and the business story to be strong, there is enough money to come in for those kind of money.
Dharmesh, the other area where there has been a lot of activity is blocks, right? A lot of blocks have happened and they continue to happen. The last, I think, meaningful one was Devyani. But, we counted, I put out a piece, some $4 billion from over the last month or so plus. But that includes, that Yes Bank pref issue as well. But even then, without that also, the number is large. What do you make of it? What do you make of all of the activity? And what kind of people are buying? Those who are selling have been invested a long time and they want to get out. But incrementally, I guess we get more signal from who's coming in. What did you make of that?
See, basically, blocks are very easy to cross because you can act immediately. Unlike an IPO or another QIPs, which take almost a month or 2 months to even launch the deal. So clearly, the action is immediate, and especially in this environment, people don't want to take a long-term volatility risk. So if the decision is there today, they are all with cash. As you know, mutual funds are sitting on all-time high cash, and there is enough liquidity in the system. And I always believe that supply brings demand rather than demand bringing supply. So as soon as they see these large blocks available, the institutional investor can actually act fast and close the deal because they are certain of what's going to be coming in next few days rather than after a few months. So because of certainty factor and stocks being attractive and they've been available at a discount to the current price, that attracts a lot of investors to act very fast. And the execution is immediate rather than after a few months.
Does the book...
It just shows you the kind of confidence people have in the India story. And if it's a good company at a good price, there's enough people to buy those blocks.
And the other thing is, the larger the transactions, the faster they seem to happen.
That's true.
I mean,
As I said, supply brings demand.
that
So
max
larger
block,
supply,
right?
larger the demand.
That max block, 10% straight away, somebody buying. And the kind of names who are coming in, I mean, strong, long-only names, right? Lots of them.
See, because all of these were not invested in India since a long time. FIs had exited India, as you know. They were actually in a huge selling spree in the last 18 months, one of the longest period at least I've seen in my career. And especially because there was a risk of trade, the money was going back to US, to the dollar. So they were basically on the selling spree, especially the ETFs. But things have changed now. I think that the global volatility in that sense is much lesser. India is a big beneficiary of what's happening right now in the global environment because oil prices have come down, inflation is coming down. So India is in a very sweet spot. So all the people who have sold out in the last 18 months, they are looking to invest in India because that looks the hottest market to come into, though it's not cheap. On valuation-wise, we must be the most expensive market in the emerging markets. But because of the growth story and the kind of condition which India is in today, and if your inflation is under control, the rates are under control, commodity prices have come down. If that is not shaken, I think so there is huge amount of money coming to India. And also don't forget there is humongous FDI money which is coming.
Yeah,
so India, the last 12 months benefited from the FDI flow instead of the FI outflow.
Yeah, that's right. Dharmesh, one thought was that the FIs, well, they were selling all markets. Now they're buying, most of the emerging markets. So India is part of that. But the sense you're getting is, reading a couple of articles that India is getting a larger chunk in spite of being at a premium multiple. That clearly goes to show that, they are eyeing more growth. The economic recovery as well over here has been rock solid. So maybe, in fact, just fingers crossed, we stand out among the emerging market and our peers as well. But how are you reading the flows picture, particularly from the FIs? The worst of their selling behind us?
Nigel, if you see the Indian corporate balance sheet today is in one of the best shape
yeah.
I have seen in the last 30 years. Despite in such a huge crisis of, COVID, and then you have this whole oil price hike, the war happening, impacting commodities in a big way. Despite that, the Indian balance sheets are in one of the best possible shape. So though we are at a premium, there's a reason for that premium. That's why the FIs are coming to India. But I would say still a lot of money is yet to come. I don't believe that the entire flow of funds which we saw in 2021, 22, that especially before the selling started, that's not yet coming, especially the ETF flows. So in that sense, it's more FDI money which is coming rather than the FI money. And even now, though the FI money has started flowing, it is still not a very large number. And just wait and watch what happens in case the war ends or this whole global event is, some kind of solution comes to it. In fact, there might be a panic buying in India because the domestics are sitting on cash and the foreigners will come to this country. So I don't think so the picture is over yet. And I think so India is in a very good position if some kind of global solution comes to the kind of global situation which we are in today.
Picture abhi baki hai. Dharmesh, the other thing, all this talk about foreign money, the Financial Times is reporting that there is, so JP Morgan is, JP Morgan bond index, they are asking large investors about getting Indian government bonds into one of the largest indices, bond indices that they run. This is increased chatter. Goldman Sachs put out a note, I remember the week before last. I remember somebody else also. So things seem to be moving now, right? Because Russia is out. So, there is space, there is room, and there is now, of course, eligibility as well.
Yeah, see, eventually India has to be in the global bond markets. Such a large country with such a large economy can't be out of this kind of market completely. So someday or the other it is going to happen. But as I said, India is a hot destination. In fact, it's a safe haven also rather than being only hot. So clearly a lot of foreign flow, equity and debt will come into India. It's just let the things settle down. But, I should also warn the viewers that the global event is not out of the way. So it can go the other way, and also especially when the winter comes and the gas prices will go, they already started shooting up. So there is still going to be a lot of events coming through, and that can be positive or negative. So I wouldn't get carried away with the current kind of bullishness. I would wait and watch to see what happens, especially on the oil prices and gas prices. Plus, you've seen a lot of fall in the commodity prices, especially in the chemical space in China, which is also going to impact the chemical companies in India. So I would say we are not out of the volatile situation. I would take one step at a time right now.
Would you take a step back though, Dharmesh? So we are at 17,500. put on your market hat and tell us what you think. Next couple of months, I mean, what's your best sense?
See, I would play right now in this kind of environment, I'll play stock specific. No use taking a larger macro call on India or on the market, which nobody knows what's going to happen. When you have such a situation which is not under our control, I rather go down to basics, do bottoms-up research, we'll look at good companies, good management, and buy those businesses. And if there is some global event of which the prices fall, either you have space to buy more, but at least you won't have sleepless nights if you bought the good companies. This is not the time to be a cowboy. This is a time to be play safe and cautious also along with it.
Dharmesh, you mentioned a few things, about India standing out. We're more bullish on India in comparison to its peers, though you're cautioning us as well. So I have to ask you about the most bullish person or the most bullish voice on India, the great Mr. Rakesh Jhunjhunwala, and you had a close association with him as well, all the way from your days at Inam, I think. So you would have known him for a couple of decades as well. We've spoken enough about markets, but I would like your comment, key lessons that you would have learned from him. Just go ahead and tell us a couple of aspects that you could relate. Go ahead.
I think it's a big loss personally and to the market. So definitely India will definitely miss such a big bull of the market, as we call him. The one lesson we always learn from him, that be always bullish on India. And India is the place where you have to be. Whenever I met him personally or socially, there was never ever any negative comment on India, and he's always been super bullish. And one lesson big which I've learned from him is always stick to your conviction. Don't get carried away by what market environment changes, what people talk. If you're convinced, stick to it for the long run, and eventually you'll go right. So whatever he's taught us in last 2-3 decades will always stay with us, and we're fortunate enough to know him so closely, and unlike others, and those lessons will always be there for us. But the biggest lesson, as I said, is trust your instincts and be always bullish on India.
Absolutely. Dharmesh, you mentioned being stock specific in a market like this. I don't know if you could name names or talk about certain businesses, but what kind of businesses? I mean, some flavor, some color would help.
Unfortunately, I wouldn't be able to say names, but I think there's a theme. Make in India thing is going to be big. The manufacturing sector is going to be huge in India in the next coming 5 years. So anybody closely related to manufacturing, Make in India kind of a scheme, those kind of themes are actually going to do very well. Financials looks very good to me because the growth is coming back. People will require growth capital, so the bank should do well. So as a theme, I would be paying things where India is the consumer rather than exporter. Because of the global environment, exports can be a little bit in trouble for some time if the things don't get resolved. But the India story is very strong. So I would rather play something which is a make in India and supplying to the Indian consumer.
Manufacturing, but what, Dharmesh? I mean, which sub-segments?
I'll be across the board. I think so. The kind of growth we are going to witness, you will require multiple times of the manufacturing capacities which are there in India today. Okay. So I will be looking at, obviously, as I said, it's stock specific and valuation wise, but clearly an opportunity is going to be there.
All right, fair enough. Dharmesh, it's always a pleasure. Thank you very much for joining us, and congratulations once again for that IPO. May we see more of these blockbuster ones. Lifts the spirit all around. Thanks indeed, Dharmesh, with